Hey, this is Tom Stewart with Maid Central. We can clean a lot of homes in our house cleaning businesses, put a lot of money in the bank, but the question is, are we actually making a profit? Well, if you have the right tools, you can not only answer that question, but you can make management changes in your business to increase the value that you're getting off of the homes that you're cleaning. One of the important tools that you're going to want to use to do that is an income statement, sometimes referred to as a profit and loss statement. This is an example. What it shows is the top line is the revenue that a company is generating in a month, in this case, $100,000. So the real question is, where does that $100,000 go? At a high level, it goes to one of three places. The first place it goes, it covers your variable costs. Most of your variable cost is your direct labor. In this case, 50%. In this case, 50 cents out of every dollar that you're generating up here, or $50,000 out of 100,000, is going to the cleaning professionals that are actually doing the work to clean to generate $100,000. That's normal. You see that in every house cleaning business. Some of it goes to workers' comp insurance, transportation, cleaning supplies. You add it all up, it's $60,000 or 60%. I want you to be thinking about this variable cost or cost of goods sold as something that goes up for every extra home you clean. You clean one extra home, you're going to be paying more in direct labor, you're going to have more transportation, you're going to have more cleaning supplies. Make sense? Sure it does. After that, you still have money left over, right? You've got $40,000. That's called gross profit. And this is kind of where it gets fun, because the gross profit goes to one of the last two places. One of those is operating expenses. Things like, your communication, your phone, your data, salaries associated with the people that work in the office. They get a paycheck too, but they're not out cleaning homes. They're not up here. They're answering the phone, doing your sales, doing your scheduling, doing your bookkeeping. Advertising, space, rent, things like that. We think of this, I would call it fixed expense, operating expense. It's not literally fixed, but it doesn't go up and down when you clean one extra home. In this example, it's $30,000. So the $40,000 gross profit, you take your $30,000 operating expense, and down here, you got $10,000 profit at the end of the month, or 10%. Not bad, but we want to be managing our business using professional management practices. This is a professional management tool. So how does a professional manager use this to generate more profit? Well, the place that we oftentimes go to is figuring out ways to lower our expenses. A logical thing to do. Let's see what that looks like. If we do an example where we're still doing the $100,000 in revenue, but if you remember, our cleaning supplies before was $2,000. Here, we reduce it 10%, and it goes down to $1,800 from 2% to 1.8%. That $200 goes right down to the bottom line, and as you can see here, you have profit of $10,200. $200 more, profit margin 10.2%. Okay, $200 is $200, but not real exciting. Generating more profit by focusing on things like cleaning supplies, which is a small part of your cost to begin with, is only going to get you marginal benefit. There's other places to look that's going to get you better results. Let's look at some examples here. One thing you can do is to clean more homes, okay? So let's say our objective is to double our profit. We want to go from $10,000 to $20,000. That's a good goal. One way we can do it is to clean more homes. In this example, we are. If we increased our revenue from $100,000 to $125,000, all these percentages still being the same, the 60% of the 125 is $75,000, leaving $50,000 left over as gross profit. Still had operating expense of 30, so 50 minus 30 gives us $20,000 down here. We doubled our profit, but we had to clean a bunch more homes to go from $100,000 to $125,000.